Good morning, everybody. This is Lucian Smith in for Gerard Gibbert today on middays here on SuperTalk, Mississippi. Coming to you live from the Element Wealth Studios. We're coming to you live here. Are you thinking about or planning for retirement? Do you have a plan? Go to myelementwealth.com or call 601-957-6006 to let Element Wealth help you find your balance between income, growth, and guarantees. Well, with us here by Telelink is Tim Vermeer with the Tax Foundation. How are you doing, Tim?
Hey, great, Lucian. I'm doing fine. Thanks for having me this morning.
Well, appreciate you being here with us. Now, tell us a little bit about the Tax Foundation and what you all do.
The Tax Foundation is a nonpartisan tax policy research organization. And so really what we're looking at doing is promoting, kind of educating lawmakers, taxpayers in general on the benefits of simple, neutral, transparent, simple tax policy that does the least amount of damage to the economy while still funding government at the same time. Do you work at both the federal and the state level, or is this mostly focused on state level policies? We have a federal team and a state team. The state team's who I work for. And spent quite a bit of last year following the good things that were happening down in Mississippi.
Yeah. So I know there was obviously a massive discussion last year, big political fight, as I suspect there is anytime you want to do anything meaningful. Did you all have a position on what the best outcome would have been for Mississippi, or what the best outcome tax-wise would be for any state?
Yeah, so I'm sure you tracked as close as anybody the developments that happened. Earlier in the year, they had put forward a proposal that was going to repeal the individual income tax in its entirety. We were somewhat critical of that position because we thought that there were some important components in there that would limit government's ability to deliver services in the future. One of those things was that it had capped the growth of the general fund to 1.5%, which was below inflation. So even on a good day, even when inflation is hitting the Fed's 2% target, that means that year over year, Mississippi's purchasing power as a state government would diminish. And so that was one of the things that we thought was a problem. The other thing was that it had a structure that was going to be really unwieldy. There were better ways to try to lower or eliminate the income tax than increasing the personal exemption to $75,000 for a married family.
So what would, obviously it's difficult to deal with any of these issues because people have, once these systems get put in place, people have organized their businesses around them, have expectations, and so there's always a constituency that's pushing back. When you've got, real meaningful reform, if we were starting from scratch, what would be the tax structure that a state like Mississippi really ought to put in place?
Yeah, I think ideally the rate would be as low as you could afford to do it. It would apply pretty broadly. You would not want to favor one particular constituency over another. And I think that was one of the good things that came out of last year's reform, was that rather than carve out large chunks of the tax base, it set forward a plan that would eliminate the 4% marginal rate, which it did, and now you have a flat 5% rate that applies across the tax base, and there's a plan to reduce that in the future, which I think is going to be really helpful for Mississippi going forward.
Well, and that was, I know, one of the big discussions. I mean, my sense in talking to the leadership is that everybody wanted to get to, everyone was supportive of eventually completely eliminating the income tax, at least at the top end of the leadership. The question was more about the timing of it and whether it made sense to pass legislation that completely eliminated it with a phase out, or whether we should go with the cut last year, which was, as I appreciate it, the largest cut in Mississippi history, and then come back and revisit it down the line. I mean, do you have a sense of, or do you all sort of think about the timing of these cuts and how we did last year on how we thought through that?
Yeah, I think that that's the trend that we see in most states that do income tax reductions or even eliminations. Is that there's almost always a phased approach to that, where taking things kind of in one, if you're going to try to eat the elephant all at once, so to speak, that usually doesn't end very well. You like to do that in kind of smaller chunks if you can. For one thing, it gives you an opportunity to kind of reassess as things go along, because what you don't want to do is there were some criticisms, I think, somewhat rightly, maybe a little bit overblown, about Mississippi being like Kansas, right? Where several years ago, Kansas had passed this extremely large tax cut and then found themselves with a whole bunch of unfunded liabilities. And
Kansas did kind of do it all at once, right? They eliminated it without a slow phase in.
Right, and there were some other kind of extenuating circumstances there that make things really difficult there, but they did kind of go whole hog on tax reform, and it just probably would have been a better design if they had done that incrementally. And so I think Mississippi's in a good place.
Well, that is certainly good to hear. One of the big discussions now, Mississippi's got, I think we're going to have $1 billion surplus on a $6 billion general fund budget. There's going to be talk, there already is talk about whether we should let the income tax plan from last year work for a few years, or whether we ought to go ahead and increase the speed with which things are eliminated. I mean, what are y'all's thoughts, or what are your thoughts on the best way to approach that, or whether we're better off, going ahead and speeding it up or taking a somewhat slower approach?
Yeah, I think that you're hitting on something really important, and that's that tax competitiveness really matters. And so if you can advance that scheduled reduction, I think if the state can do that responsibly, if the state can still afford to pay all of its other bills and everything on time, and then go ahead. I mean, Arkansas did that twice in the last 2 years, where they've accelerated reforms that they had previously kind of strung out over the period of 4 or 5 years. That just happened recently in a special session they held at the end of last year. So if the revenue is there to reduce that rate, I think that'll be a really big benefit for Mississippi. The important thing is for economic growth is not so much the intermediate tax rates, like that 4% rate that the state just eliminated, but it's the top marginal rates that really make a difference to businesses that are looking at what's going to happen to their next dollar of income.
And do you all track, or I assume you at least think about, and I think your comment there sort of illustrates this point, but I mean, I assume that businesses, that the tax structure of a state plays a non-zero role in a business's decision to either locate in a state or expand its existing operations in a state. I mean, how important do you think tax structure is as these business generators decide where they're going to be?
Yeah, there's a lot of reasons why a firm or why a family will locate in a particular state. They've all got a different basket of preferences, right? And there's reasons why certain corporations are willing to locate in New York City despite having one of the highest tax rates in the country. I mean, they've got access there to the world financial markets. There's a lot of reasons why people will be willing to pay this. And so a lot of these decisions, they happen on the margin for people. It's a matter of, you're not deciding necessarily whether you're going to lure BMO Bank to Jackson, but it makes a difference whether or not people end up in Birmingham, or in Mississippi.
Right.
A lot of these small businesses, they're trying to make it. They're trying to, every dollar counts. And so that matters to them, especially if you're living in a border county.
Yeah, that makes a lot of sense. Where a percentage point here or a percentage point there could make a big difference. So as we sort of go forward as a state, I mean, do y'all, I mean, is the total elimination of the income tax, assuming that we can do it? Well, I'll tell you what, we're coming up on a break, Tim. You got time to stick with us for a few more minutes?
Absolutely, happy to.
Sounds great. We'll get you after the break here. This is Lucian Smith in for Gerard Gibbert on middays on SuperTalk Mississippi. Stick with us for more conversation with Tim Vermeer of the Tax Foundation. Good morning, everybody. This is Lucian Smith in for Gerard Gibbert here on middays on SuperTalk Mississippi. Coming to you live from the Element Wealth Studio. Are you thinking about or planning for retirement? Do you have a plan? Go to myelementwealth.com or call 601-957-6006 to let Element Wealth help you find your balance between income, growth, and guarantees. Well, we're continuing our discussion here with Tim Vermeer of the Tax Foundation about tax policy in Mississippi and around the country. If you'd like to be part of the conversation, join us on the C Spire text line at 601-879-4395. But remember, please don't text and drive as you're joining that conversation. So, Tim, do you cover a specific set of states, or are you part of the state team and all 50 of us?
No, I cover about 12 states right now.
Okay. And do you think? I mean, how is Mississippi? If you were to, and don't let me put you in an uncomfortable position, but I mean, if you had to rank where Mississippi is among your 12 or among the 50, I mean, how are we where we need to be? Or do we have a long way to go? How would you describe our tax structure here?
Well, I'll tell you this: the Tax Foundation has a helpful tool, the State Business Tax Climate Index, that we rely on pretty heavily to make a lot of these comparisons. And so before these reforms that went into effect, before they took effect, Mississippi was right about 30th overall. Its tax structure was, you can think about that as the 30th most competitive tax structure in the United States. When this reform, the income tax reform, is completely phased in 2026, it'll be the 19th most competitive tax structure in the country overall. So that's a really big gain. And so when I say that there were good things that happened with this tax reform bill, that's the truth. And you can think about where Mississippi ranks, where its top rate ranks across all the other states that have an income tax. And when it gets down to 4, it'll be at sixth.
Oh, wow.
The sixth lowest tax, income tax in the country among states that levy one of those taxes.
That's so. As you look towards the 23 session, I know, are there specific things you think Mississippi ought to be doing this legislative session as we continue thinking about the way to have the right tax structure for the state?
I think building on the reforms from last year is a good place to start. I think that taking a look at whether or not the budget can sustain an acceleration down to, I've heard, 3.75, 3.5. Take a look at that. I will say in 2026, when this current rate is reduced to 4, Mississippi will already have the lowest income tax among all southern states that levy a tax. Of course, that doesn't include Florida, which doesn't have an individual income tax, but a lot of other states are seeing what Mississippi is doing, and they're trying to compete as well. So if you can edge that down even into the 3s, I think that'll help. I think it would be helpful also to look at some things in the corporate sector too. We talked about the full expensing of capital investment for corporations. That's something I think Mississippi could get on board with. That would really promote a modernization of industry.
And unpack that a little bit for us, Tim. Yeah. Explain to our listeners, if you would, what you mean by allowing people to fully expense those capital expenditures.
Sure. So when a corporation invests, prior to 2017, there was a pretty complicated depreciation schedule. They could deduct all of their expenses for investment in machinery or what have you. That was part of the business. But they did that over a period of decades usually. And so what you do is you would take your business revenue and you'd subtract the cost of that investment, and then you'd pay taxes on what's left. But you're paying that investment in that capital asset this year. the same year that you're making money. So really, when you offset those, you should have a tax liability of probably close to zero in those years. What the Tax Cut and Jobs Act of 2017 did was allow corporations to expense 100% of those capital investments in the year the investment was made. So right now, or in 2022, firms in Mississippi could do that on their federal return. They couldn't do that on their state return. But even at the federal level now, you're starting to see a phase out. So states that were really benefiting from a lot of influx and investment, corporations are going to probably start to alter some of their behavior that way if Congress doesn't do anything, which is probably unlikely right now. Mississippi, I think, could really benefit from passing a full expensing provision that allows those states to spend that money on modernizing their equipment, because it all drives productivity, and productivity is highly correlated with wages and salaries. So you want to bump up wages and salaries for working men and women in Mississippi, pass a full expensing provision.
That's a great point you make. I think people forget, especially now that so many of the big business generators in the country are are entities that operate in multiple states. They've got a fixed amount of capital they can spend across their footprint, and they're going to figure out where's the best return on invested capital among those states. And I assume that the tax policy across the states is one of the things they take into consideration as they figure out where to deploy that capital.
Absolutely, yeah. We talk about those financial resources as acting like water, right? They flow to the lowest point, and they tend to generate the greatest return on investment in those areas. And they take a lot of these kind of below the fold kind of not headline grabbing policies into account. It's not something that maybe most taxpayers, most voters think about or really probably understand a whole lot. But businesses have whole departments that just focus on how competitive is their industry going to be, or is their firm going to be in a particular state. They spend all day looking at this kind of stuff. So I think Mississippi forgoes that provision kind of at their peril.
Well, and I appreciate all the work that Chairman Harkins in the Senate and Chairman Lamar in the House have done so far on this. I know they're both committed to making us as competitive as we can be, as are Lieutenant Governor Hoseman and Speaker Gunn. What other things ought we be thinking about to make Mississippi on the tax front as competitive as possible? I realize taxes aren't a panacea, but what other things ought we be thinking about here?
Yeah, I think another thing would probably be the way that Mississippi deals with remote workers, and reciprocity agreements. I think are probably another good thing for states to consider, where you can get a credit against your taxes for what you've paid to other states. I mean, if we talk about the impact of remote work after that pandemic, that's here to stay. Which is another reason why I think it's probably wise to, accelerate the rate reductions if you can. People are making decisions still. They don't have to. They can work for a company in Boston without being in Boston anymore. They can live with near family in Mississippi. They can enjoy the Gulf Coast, and they can work remotely. And that's something they couldn't do pre-pandemic. I think it's kind of a great side effect, if you will.
Absolutely agree.
Something that policymakers should keep in mind.
In terms of the income tax, just because that's the issue that's getting so much attention down here, I mean, should our goal be the full elimination of the income tax when we're in a position to do it, whether that's this year or 10 years from now? I mean, ought we be trying to look more like Florida in terms of tax structure?
I think that's a tough question, and a lot of it depends, right? I don't want to give the economist answer of it depends, but it kind of does. And certain states are that's easier to do. I was just in North Dakota. I think that they've got a really good chance at getting down to zero on their individual income tax, but they're already at 2.9. It makes up a very small percentage of their own state revenue. And that's, I think, a bit of a contrast to the way that Mississippi's structured, where the individual income tax, at least a couple of years ago, was about a third of the state's revenue, brought in a couple $1 billion. And so a lot of times these tax rate cuts are helpful economically. They don't tend, as a rule, to pay for themselves. And so not entirely. There'll be some trade-off there, but there has to be a way to still pay the bills. So
that makes sense. And you see, I assume, sometimes taxes increase elsewhere, and it maybe have to get revenue at the minimum levels that a state requires.
Right. That's exactly right.
Well,
so a lot
Tim,
of it's
thanks
about striking the right balance.
Well, we appreciate your taking the time to be with us to discuss it, and appreciate all the work that the Tax Foundation and you and your team have done down here to help Mississippi get to a good place. So thanks for being with us. Thanks for the conversation. This is Lucian Smith in for Gerard Gibbert here on Middays on SuperTalk.